Good morning, good afternoon, good evening, one and all. Welcome to another edition of the Smoking Barrel. I'm Rustin Edwards, based in Switzerland, with illustrious co-host Mr. Matt Stanley in Dubai. It's
Greetings.
Friday, day 7 of the U.S.-Iran war.
Yeah, it is. I put on my commentary this morning. This time last week, my biggest issue on a Friday morning was trying to find a parking space that I could get a coffee and be close to where my kids need picking up from school. And I was frustrated, wondering why no one will allow me to have that space. And then here I am a week later, where I'm getting alerts from the government at night saying there's a missile attack on its way. Take shelter. So it's been a hell of a week, put it that way. But we're all okay. I think a lot of people are. Dubai's a funny one because there's a big sense of community, even though the vast majority of people here are expats. That kind of intensifies a communal feel to some degree. And everyone's very protective around where they live. Like, if you say to someone, "Where do you live?" and you say, like, "Oh, I live in like Dubai Hills," they'll be like, "Oh, yeah, mate, I love Dubai Hills." And then you kind of go, "Oh, but he lives in the Springs." Yeah, no, I'm not a big. Everyone's like really protective of where they are, but no one really gives a shit about that anymore. Everyone's going, he's getting the same alerts, hearing the same bangs. But the government have done as they do, have had a very calm head and not panicked, not done anything out of policy. It's activity has waned, but then when activity suddenly picks up again, it seems somewhat more dramatic, if that makes sense. And
Sure.
it's shit, mate. I can't. It's shit, but we deal with it, and I don't think anyone living here or in the region thought that this would be anything they would live through. See, that was a door that was just closing, and I'm like, what the fuck? What is that? Do you know what I mean? It's like any little bit of construction noise or anything, and people are on, anxiety levels are through the roof. But we shall see. It's The smoking barrel has been really good for me, and I want to thank everyone. I'm not trying to be dramatic or any shit like that. I'm not like that, but to have the platform to talk to you, especially you, as one of my good mates, about what's happening in markets has been cathartic, and so is my commentary, and everyone who's reached out has been it's been humbling. So yeah, I just hope I can keep my gold frequent flyer status. That's what I'm worried about.
Well, if we look at oil markets here on this Friday morning, we've got crude oil at 85.11, still kind of meddling around that range. It's down 30 cents off the close yesterday. Gas oil still well above $1,000 a ton.
Yeah,
1082. I mean, kind of an interesting quote from ARA that biodiesel is now under the price of gas oil in ARA. Um,
really.
yes, so it's cheaper to buy B100 than it is to buy gas oil right now.
Wow. I mean, look here we are, 1,083, $85.14. I mean, bit of a sell-off today on the back of mainly because of the uh US news overnight, which was the US waiver on Russian crude for 30 days, offers some near-term relief. I'm trying to get rid of 321, $41.51. That is the 321 crack. That's up from, oh, it's not working properly. If I were to go back a week, I won't at the moment. Flat price are up here. I mean, diesel, March goes off the screen, I think, early
Next
next
week.
week. Yeah. But April's still above $1,000 about a ton. I'd say are we in a holding pattern? Is
Well,
that fair to say?
I mean, we talked about this yesterday. I mean, we are trading within a range between 80 and 85.
Yeah,
And that does seem to feel like a holding pattern because nobody really knows how long this war is going to continue.
yeah,
And are things going to happen to mitigate the price action? So, like we just said, we have the US granting India a 30-day waiver to take in Russian crude oil, which, all things being equal, I think India would have taken in Russian crude oil without the waiver because I think they were still taking in some Russian oil,
yeah,
but mainly for their domestic production. So they're going to bring it in for everything.
yeah,
I think it still bears to say, what does the EU do about uh, the 18th sanctions and the Russian origin crude products derived? Do they allow Russian gas oil or gas oil produced from Russian crude to come into Europe or not?
Yeah, I mean, this is a question that when I was hosting the Kepler webinar yesterday, I put to everyone. We had a gas session, LNG, we had a policy session with Amina, like I said yesterday, and we had crude and we had products. And I asked every one of those on the panel those questions. That question: Do the EU, based on energy security, do they ease sanctions on Russian energy coming into the bloc? And most people seem to think, I don't think so. I just don't. I don't see that happening. Some people do think that will happen, and the probability's gone to about 35, 40%. The question is, though, are we now in a position? Are the EU now in a position where they're having to go to Vladimir Putin for a favor?
I don't think they, because, to flip that script a bit, there was a headline out this morning that Putin has already said that he may cut gas exports to the Europe because Europe is still taking in natural gas via the pipelines into Europe. So if that's the case, then I don't think Putin's there to give them a favor. But nevertheless, if I think if energy prices get squeezed to a point that they need to do something to cool price action down, reopening the spigot for Russian gas oil, Russian origin jet, Russian origin naphtha gasolines to come into the EU to help put a cap on prices will be an action that will probably be taken. But I think you still need to see that in that economic impact hitting the pump, which, prices have gone up in Europe, but I don't think they've gone up to the, oh my God, things are going crazy price just yet. They will eventually filter through.
Yeah, I mean, and that's when the old AA, the Automobile Association of the UK, and the Royal Drivers Club and the RAC come out in the Daily Mail saying, "Oh my God, price at the pump." And then once it gets to that point, the end user feels it, and then we're talking about inflation risk. But we'll have to cover that in next week, I'd imagine. I want to show you a stat because what does it all mean? We're talking about prices, been talking about it all week, and I got the guys to put together a it was actually sort of a conversation, and then we were having around, what's the build up of goods, say, west of the Straits of Hormuz, and how much passes on a daily basis. Let me show you this chart. This is on an article we're putting together now. I'll say we, my colleague Flo, he's brilliant, and he pulled all this together. This is Middle East Gulf commodities on the water. So this is basically anything west of the Straits of Hormuz. So from Iraq and Kuwait all the way down to Ras Al Khaimah in the UAE, essentially. This is what's currently on the water. This is essentially what moves. This is a daily average, 2.8. So that's basically the metric there is what, if you were to say from west of Straits of Hormuz to east, this is what passes it on a daily basis. $2.8 billion worth of crude. You can see clean products, so gasoline, naphthas, etc., diesel, fuel oils, LNG, and then LPG and ammonia. This is where we are now because it simply can't move. So we've now got these data points where, okay, this is everything that's loading, but it can't go any further. So that's commodities on the water within the Middle East Gulf. And that's a total of about $15.2 billion. That is continuing to climb. Once that if it will continue to climb because the Straits of Hormuz are still closed, even though there's some nonsense saying Iran have never closed the strait yesterday. You read
Yeah, I
that,
think
didn't
that was the quote from the Iranian foreign minister that, oh, the straits are not closed. You can transit.
you? Was that some kind of messed up kind of like ploy?
Well, I think it's a case of, you've got the Iranian foreign minister who's, spouting how they are they're the aggrieved party in all this. They're working with their Gulf allies to um, force this war to come to a quick conclusion. But they're there for the long haul. They're going to fight it out as long as they can. The foreign minister thanked Saudi Arabia for not allowing U.S. to use their airspace, yet they're bombing them with their own missiles and drones. But to say that, oh, we haven't closed the strait, companies are making that decision privately, but we haven't done that, even though I think there has been, that radio communication from the IRGC saying ships are not allowed to transit. So, how much of that is politics? A lot of that's politics, I think.
Yeah, you're right, and it's we're in a position where let me just put the light on. Sorry. I'm wary of even having these opinions because who knows what can happen. But I mean that's the skeptical, anxious Matt Stanley coming out of me. But if we talk about where things are right now, so okay, I mean, how do we recap the week? I mean, I tried to do it in my commentary this morning. It's very difficult, but for the last session of the week, first week of March, last month of Q1. What I mean, if I was to say to you, Russ, summarize the week. I say I've been in a coma, right? Let's say I had an unfortunate accident and I woke up this morning and I said, so what's happened the last 2 weeks, Russ? What would you say?
Well, I would say that we've got a $15 move in crude oil prices because you've got the Straits of Hormuz closed due to Israel and the United States attacking Iran and
Right,
Iran
hang on.
retaliating.
That one point there, right? Let's okay, because there's lots going on. You can expand on those points in a minute. I would say to you, hang on. The Straits of Hormuz is closed, but Brent's only moved $15 a barrel. What's going on?
Well, but I think that makes perfect sense in the position of where the world is on the amount of supply that's sitting on the water. I mean, until you have and the whole thing around the flat price move, it requires a shock to get that price to move up. And we're gradually grinding higher because the longer, as you just said, the longer this extends out, the more product gets backed up in the Persian Gulf, results in a demand pull away from the market. Now, one of the things that a demand pull pulling away from the overhang that was in the market. Now, the one thing that is different that is not causing a $150 spike or a spike to $150, excuse my um,
Yeah.
parlance there, is that A, there's a lot more crude being developed delivered in the world than there was maybe 10, 15 years ago. And it's
Okay.
not Middle East centric. Russian crude is still on the market. Despite all of the works, there's still plenty of Russian oil available. So that's not gone to zero. But you still have Guyana, you have Brazil, you have the United States. If anything, this move up in flat price will help stimulate U.S. production because now you've got, value to hedge and you can actually just start, drill baby drill in the Permian Basin and what have you. And, maybe U.S. exports get up, or production gets up above 14 million barrels because of this. And it doesn't
Yeah.
take a long time to get that shale production onto online and out to market.
Yeah, but okay, I
You
hear you.
also have other logistics that were not there that are there now. The TMX pipeline, that's helping debottleneck Canadian production. You've got Venezuela now back in the commercially tradable realm, and they've increased their exports a bit more because of that. So you have a bit more of a cushion that was in the market beforehand. You can throw on top of that the stock build that China has done over the last, 6 months. And, so they're not really out there to pull barrels, oh my God, they're buying everything in the world because they've got this huge stock cushion all of a sudden that they didn't have before. So I think the world's in a much different place. That's why we're not at $100 crude yet.
Yeah, okay, I hear you, but you're talking about an oil market that behaves very sensibly and calmly, and
And it
approach.
has. It has behaved sensibly and calmly. It has.
I agree, but and I mentioned this on Monday, whenever it was. I was talking to some colleagues internally, and I said it's like Brent has grown up. Like it's not like, oh my God, fuck me, right, panic, mine, lift everything I can, and suddenly we gap. Well, like jet fuel is. I think it's I actually think it's genuine panic in the distillate market.
Well, yeah, in
But
the distillate market, you're seeing the reaction of losing all that excess refining capacity that's in the Middle East, exporting barrels to the world.
yeah,
And that's what you're seeing on gas oil, jet fuel, and naphtha. Because if you look at what's going on in the naphtha market, you have a lot of petchem units that are shutting down, declaring force majeure because they don't have the feedstock coming in from the Middle East.
yeah,
So you do see that in certain product groups at the moment. You see it in the fuel oil market, as we talked about yesterday. Prices of fuel oil are grinding higher. High sulfur is above $500 a ton now. Um, and
okay, hang on. Okay, let's say then, and God, I hope for this, that suddenly there's an agreement, or suddenly there's surround, whatever will happen. Suddenly there's agreement. The Straits of Hormuz is open. Does flat price puke?
Oh, it does. I think there's a reaction that that will happen, even though it will take time for the actual physical molecules to come back in. I mean, when you think about, okay, you take a refinery that's been shut down because, okay, there's nowhere to, or there are minimal run rates.
Yeah.
You still have to get ships in to load and out. And
That's that's really. Do you know what? That's a very, very good point. And if I'd have said, if we were having this conversation 2 or 3 years ago, I think the reaction would have been the other way. I think the dynamic would have been a slow grind down, but high gaps up. But now it seems that the market kind of is a bit more fearful of people selling into geopolitical risk. Is that fair?
um, it might be fair, but I mean, you look at what's going on with structure. So, the market has gone into a very strong backwardation on crude oil,
Yeah. Yeah.
and that is a pure reflection of the geopolitical risk. So in the prompt, very strong, but you go to from May to August, you get a $10 change in value.
Okay. Okay. Here's a bastard of a question. Okay. Would you buy gas oil cracks? Would you buy structure in Brent markets right now?
That's a very interesting question.
That's a
Um,
bastard of a question. I
yeah,
just
the trader in me says no, just
what
because
would you be priced in?
the move's been made.
Right.
And so what are you playing for? So you look at the M1, M2 on Brent. You've got roughly, let's call it 450 in value there. Or is it 350? No, it's 450.
Yeah.
450 in value.
455.
You're roughly
Amazing.
$85 in the front, 80.50 on M2.
Yeah.
Okay, so can that go to six? Sure, it can. Can it go to two? Yes, it can.
You're not answering a question here, Edwards.
Well, I am answering the question. I said I would not trade that because the move has
What
already been made. I
what
mean,
about what about our favorite June set Brent?
again, I would not trade that. I would be a seller of that if anything.
630. Really?
You'd want it because it's okay. There's no reason to buy something that's already made that move, in my opinion. You're buying the high in hopes to make how much more? What's your risk return? Because it's risk reward.
Do you know what?
If you think it's going to go to $10, then you're talking, $120 crude.
Okay, do you know what I think the trade is there? And like, I'm not. I'm sort of being complacent here around a sort of an agreement coming to place. I think the trade is probably to sell June set Brent, make that money when we bought it at one, and then buy June deck Brent.
Well, that could be, but you still have people, part of the reason why markets are kind of sitting where it's at is that people are taking profits every chance they get.
Okay.
You're going to move up, profit taking, move up. So you don't have people just holding
Yeah.
and pushing the market higher to build a long, long, long position. I think people have learned their lesson when it comes to the geopolitical events, because what happened in June of last year? You
Yeah,
had
absolutely.
the retaliation of Iran to the US, and that was it, and markets collapsed.
Okay.
And that could happen here. Not saying it's going to, it could happen here.
Well, look, before we get sued for people taking positions out and then saying the smoking barrel owes me a gazillion dollars, let's talk about something else. Okay. Let's talk about the news that we heard last night and we were going to touch on it. US waiver on Russian crude offers near term relief for Indians' crude hunt, not a fix. So, explain to the uninitiated what happened last night by the Treasury Secretary Besant, is it? Scott Besant?
Right. So the US government, put a warning that if you take Russian crude, we're going to put massive tariffs on you and, potentially look at secondary sanctions. So, of course, the Indian refining sector, started backing out Russian crude from their purchasing.
Yeah.
And then you had the announcements that were done basically yesterday that they were going to stop exporting product because they don't have the crude and they're concerned about having the crude oil to run. So they're focusing more on internal marketing versus their export markets.
Yeah.
So in order to keep export markets cool and keep things under wraps, you need to have them increase run rates again. So you need to have them get access back to the Russian crude.
Okay.
So this is just a stopgap measure in order to try to facilitate higher run rates to put more product into the market because jet and gas oil and naphtha need to be exported out to, meet the world.
Okay, so we'll talk about what the EU may do. Well, I just want to show you what this means. So, assume it, brilliant. You wrote this very early this morning, was all over it. Um, let's put, okay, here's what we try and do. Let's put some context around it. Here is what we say. As of the 6th of March, roughly 130 million barrels of Russian crude remain on the water, including around 27 million barrels in the Middle East Gulf, Indian Ocean region, 20 million barrels near the Red Sea, and roughly 7.5 around Singapore. Let me put it into context for you so you can see it on a map. So here we have all the barrels of Urals, ESBO, and SBL Siberian Lake. This is East Siberian Pipeline. Most of them coming out of the Baltics. Nothing really coming out of the Black, well, nothing coming out of the Black Sea. This is the main route. Here they are through here, Suez Canal. You see the main route here. This is where we've got oil, Oman, more in Oman, India, some around the coast of India, on their way to Singapore. Some what we call east of port limits, which is Singapore as well, and then the balance goes up to China, and this is Cosmino here. Nothing coming out of Vladivostok. So this is where we are. You can see that it's pretty clear where all of this oil goes. It's not going anywhere here. There's some here just off Dakar. I'm not sure what that's about. There's nothing in Latin America. Nothing here. Boxed. One coming around the Cape of Good Hope, and then most coming out of India. So we need to check how long this has been at. This is actually on its way to China, it seems. This one looks like it's floating storage. Yeah, it's on its way to Chennai. This one's going to Paradip. So how much can they actually call on at any time? I think what you'll see, if it hasn't been planned for already, I'd imagine that there are some entities perhaps who had. I've got to go. That's a missile alert. My wife's just gone out with the kids, so I need to call her. We'll record the rest of this in a minute, all right?
Yep.
Cheers.
Stay safe.